Hey everyone, it's Rue here. Today, we're talking about how to avoid paying your taxes. And I'm not talking about just not paying them, because, that's pretty illegal. And I know that talking about taxes when it comes time to paying them isn't the most exciting thing in the world, but what is exciting is knowing how to avoid them in a legal way, of course. Which is exactly why I made today's video, to show you exactly how to avoid Uncle Sam, the tax man.
Oh, here we go again.
Okay, just to emphasize some of the lawyery stuff before we get started, it is crucial to pay your taxes in full and on time. And let me be clear, tax evasion, AKA not paying your taxes, that one is a crime. Does have some serious consequences, including fines, penalties, and even imprisonment. What we're talking about today is a little bit different. So don't do that. You're not Al Capone or Jordan Belfort, okay? No funny business. But don't worry, there are legal ways to reduce your tax burden. And here are some of the strategies that you should know about. Oh, and by the way, the illegal ones we're actually gonna save till the end of the video. FBI, open up! Just kidding, IRS. I'm just joking around. Okay. Now, first is a really simple one, but a lot of people just don't know how to take advantage of it, and that is to contribute to your 401k or your IRA account. And I don't know if you know this, but those contributions that you make to those accounts are actually tax deductible. And if not tax deductible, at the very least, tax deferred, meaning you will only pay the taxes on the money that you put in there at a later date when you withdraw the money. And before you contribute, make sure to research the types of retirement accounts you either already have or that you could set up. If you work for somebody, always check to see if they do have a match program, because that's essentially free money. Also, make sure to find out exactly what your contribution limits are every single year, because each account has different values and your age might play a role into how much you can put in there as well. If you're not sure where to look, literally Google the type of account, for example, 401k, and look up my contribution limits per year, and it will show you your contribution limits for that year. These values do change over time, so even though last year it might have been $6,000, this year might be different. And on top of all that, the easiest way you can set up these contributions is to actually have an automatic withdrawal from either your paycheck or your bank account, which will make the process literally seamless for when you want to invest into these accounts. Now, you might already have a retirement account, and maybe you're already doing these contributions and deferring and completely annihilating the taxes due, but hopefully these next few tips will open up Pandora's box for the way that you do taxes. Taking advantage of deductions and credits. Imagine deductions like a jewelry store, tax credits being like a getaway car, and your tax bill is in desperate need of getting paid. Sounds like the perfect story for an Ocean's 14 film. Now, all joking aside, you may be eligible for certain deductions or credits that will reduce the overall amount that you owe on your taxes. And since some of them will apply to you and others won't, the best way to find which ones are applicable to you and your situation is to look at your personal circumstances and the area that you reside in and compare that to the ones that are available in that area and to people like you. And if that seems a little bit over your head, don't worry, here are some popular ones for you. The first one is the Earned Income Tax Credit, or the EITC. That one is available to low and middle income earners and is based off of income or the number of qualifying children. The second one is the Child Dependent and Care Credit. That one is available to people who are paying for childcare in order to work, or at least look for work. The next one is the American Opportunity Tax Credit, or the AOTC, and that one is for people who are paying for college and is worth up to $2,500 per year. So if you're going to college and you're not taking advantage of it, please do. Then we have the Savers Credit, and that's available to anyone that is contributing to a 401k or an IRA account. And the last one is the Mortgage Interest Deduction, and that allows you to deduct the interest paid on your mortgage from your taxable income. Pretty cool, right? But before you do any of these, please make sure you have the proper documentation to show in case you do get an audit. That means receipts, bills, or other records that show proof that you qualify for these deductions or claims. Otherwise, Sam the Taxman may come knocking at your door. This one, the billionaires and millionaires of the world absolutely love, and that is charitable gift giving. How this works is simply taking some of your income and donating it to a charity or an organization, and whatever you donate, you can claim on your tax return. And the best con men and women have their own philanthropic organizations where they take money from their income and they put it into their other pocket of income. But not everyone has one of those, so the more common ones are as follows: the American Red Cross, the Salvation Army, and Habitat for Humanity. insanity. And most likely, you're not a billionaire or a multimillionaire if you're watching this video. And if you are, congratulations. I'd probably start a nonprofit right away. But maybe you already have some money in the stock market. And you might be thinking, are there any deductions for those type of expenses? Well, don't worry, Mr. Jordan Belford. I got you. This next one is called tax loss harvesting. If you have investments that have lost value, you may be able to sell them at a loss and use those losses to offset gains from other investments, thereby reducing your total taxable income. Voila, this is the quaaludes of the tax system. Simply put, this is how investors make a lot of their money on both ends. Typically, when you invest money into stocks, whether they go up or down, you win. Here's what I mean. Let's say you buy a stock and let's say the stock goes up. Technically, if you don't sell that stock and it stays in your portfolio year in and year out and it's just trending up, you won't have to pay any taxes because you never sold, AKA you never have to pay capital gains tax, at least until you sell that stock. But let's say that stock tanks and you end up selling it. Well, guess what? Now you can deduct it from your taxes since it's considered a loss. And that is why this is a win-win for any investor. So look at your investment portfolio, especially before the end of the year, to find any investments that have lost value and make sure to sell them before the calendar year is up so you can take advantage of tax loss harvesting. Also, make sure to keep track of your tax loss harvesting activities, because if you lose enough, those same losses may be used to offset future taxes as well. Mainly because there is a limit to how much you can write off using this strategy, but don't tell Uncle Sam about this. Oh wait, he already knows about this, and he's actually encouraging you to do this because it's in the tax code. Now, before you go and tell your friends that you're the next wolf on Wall Street and you know how to avoid the tax man, keep in mind that the available tax strategies that may be available to you may not be available to somebody else. What I mean by this is that they vary wildly from person to person, year by year, and circumstance to circumstance. But here's my advice. My advice is to gamble all of your life savings away in a casino. Or better yet, just rob them for all they got. Again, kidding, okay? My actual advice is to consult with a tax professional, or at least make sure to research the tax laws in your area to figure out which strategies might work for you. So there you have it, some legal ways for you to reduce or completely eliminate your tax burden. Remember that it is still important to pay all the taxes that are due. Thank you all so much for watching, and I hope you enjoyed. And if you want to see more content like this, I have an entire generation wealth building playlist here. Oh yeah, and don't forget to like and subscribe, and I'll see you guys in the next one.